Hello everyone, greetings from Kotak Mutual Fund. Today we'll delve deeper into the performance and process of Kotak Smallcap Fund. Since inception, Kotak Smallcap Fund has a history of generating double-digit returns. In fact, the long-term history suggests that the fund has significantly more instances of outperformance versus the benchmark. As a process, the fund aims to generate healthy returns during good times and, more importantly, protect the downside during weak times. This is corroborated by the fact that the fund has a history of protecting the downside during major crises. While the fund history long-term performance has been good, it's seen a period of underperformance over the past 1 year or so. Please note that these periods of underperformance are not new to this fund. The fund has faced similar periods of underperformance during March to June 2014 and January 2017 to January 2018, which was recouped during subsequent periods. Our process and portfolio is built on identifying and investing in strong companies with growth longevity over a 3 to 4 years rolling period. A portfolio of such companies can go through a temporary period of underperformance, either because one, existing strong companies in our portfolio are going through temporary challenges, which will highly likely resolve in the next 1 year or so, and or weak companies with fragile business model that aren't a part of our portfolio are seeing temporary performance uptick and concurrent stock price re-rating. We avoid such companies as long-term history suggests that the pain of holding and getting stuck with such companies will be far higher than the temporary gain that we could see in our portfolio for a year or so. Let us now delve deeper into our process of investment. We believe that India progresses from the present $3.5 trillion GDP to a $10 trillion GDP. There'll be many small cap companies that will become bigger in size. We at Kotak are focused on identifying themes and ideas that will benefit from India's growth journey ahead. Our process entails dividing the small cap companies into 3 buckets, which we call as quality compounders, normalcy candidates, and wealth destroyers. Quality compounder bucket has companies that are solving an important customer problem. Run by a competent management team, these are typical market share gainers with high return on invested capital. Companies in this bucket should ideally see linear compounding over our time horizon of rolling 3 to 4 years period. Moving on, normalcy candidates bucket has companies that are undergoing a temporary problem today, but the balance sheet is strong. We believe that management team is competent and working hard to ensure business recovery is ahead of any macro recovery. A portfolio of such companies benefits from sharp earnings improvement and concurrent a high probability of a valuation re-rating. Lastly, wealth destroyers bucket has companies that we'll avoid. These include companies that have weak business model, weak balance sheet and or cash flows, and lastly, weak governance structure. The idea is this, that we need to identify a ballpark equal proportion of bucket A and bucket B companies where earnings can compound at high double-digit rates over the next 3 to 4 years and avoid bucket C companies. We believe that if we do this well consistently, then good outcomes should highly likely follow over time. To reiterate, we strongly believe that if we avoid the losers, the winners will take care of themselves. We strongly believe that our process is less likely to produce extreme volatility, less likely to produce huge losses which can't be recouped, and most importantly, more likely to work. To conclude, we believe that small cap investing is a land of opportunity for investors with the right risk tolerance and right time horizon. That said, one needs to navigate the short-term volatility and the associated challenges to be able to enjoy long-term. So please speak to your mutual fund advisors before investing in any small cap fund. Wishing you all happy and safe investing. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.